To ensure accountability and transparency, state statute requires local governments to undergo a yearly, rigorous financial audit conducted by an independent CPA firm. The 2021 audit for Jackson County was conducted by Moss Adams, and they presented this year's results to the Board of Commissioners at a recent meeting.
I'm Amanda McCleary-Moore. I'm a partner with Moss Adams, and we are here today to present the audit results for Jackson County. And with that, I will turn it over to Leslie.
Okay, so our agenda, what we're going to go over the following things today. So we're going to go over the engagement team, the nature of services provided, the significant audit areas, the auditor opinions and reports issued, the communication to those charged with governance, the county statistics, and then the new auditing standards. So our engagement team. So Amanda McCleary-Moore, as she said, she's the engagement reviewer and the partner for the audit. She reviewed all the work papers, and then she also signed the audit reports. And then Keith Simovic, he's one of our newest partners in our government practice. He is our concurring reviewer, and he has worked on the engagement for several years. And then myself, Leslie, I provided the daily supervision of the team, determined whether engagement objectives were being met, and resolved any issues identified. And then Michael Moore, he was responsible for preparing the more complex sections, managing the staff on the job, and then helping to wrap up the audit. There's also other members of our engagement team who are not listed on this slide. This slide covers the services and reports that Moss Adams issued, as well as why they were required. So number one, we audited the county, the Jackson County 4-H Master Gardener and Agricultural Extension Service District, the White City Enhanced Law Enforcement District, and the pension plans in accordance with generally accepted auditing standards and generally accepted governmental auditing standards. We also performed a review of the White City Lighting District, which is less in scope than an audit because the district expensed less than $500,000 during the year. So that's all consistent with the prior year as well. And then number two, we assisted with and performed a technical review of the financial statements to ensure they were in compliance with generally accepted auditing standards, as well as the Government Finance Officers Association, or the GFOA. The county issues an annual comprehensive financial report each year, which means your financial statements include additional statistical and introductory sections. And the county has received the GFOA Certificate of Excellence for several years, which is a great accomplishment. And then number three, since the county is an Oregon municipality, you are subject to the Oregon minimum standards, and therefore we test compliance with the provisions of the Oregon revised statutes, which include such items as review over budgetary law and procurement policies. And then we'll go over those in a little more detail in the next few slides. And number four, since the county spent over $750,000 in federal awards, we performed a single audit under the uniform guidance. Number five, we issued a report over the compliance requirements related to passenger facility charges since the county has an airport. Our testing is done in compliance with the requirements described in the passenger facility charge audit guide for public agencies, and that's issued by the Federal Aviation Administration. And then number six, reporting. We report on the overall audit plan at the beginning of the audit, and then at the end, we report on the audit results, including communicating any internal control findings or issues of non-compliance. And this is what we're doing today. Okay, so the next one, critical audit areas. So these aren't all the areas that we test, but these are the areas where we spend the most time on during the audit. So cash and investments. So cash is a significant balance on your financial statements, and there are extensive disclosures around this area. We perform testing over these balances through confirmations, ensuring the banks used by the county are qualified depositories, and we review the financial statement disclosures to ensure they are complete and accurate. And then number two, the revenue and receivables. This is a complex area since they are reported using three different bases of accounting, budgetary basis, full accrual, and then the modified accrual. We test revenue through confirmations, analytical procedures, and through detail tests. We also test revenue cutoff through our receivables testing. And capital assets, you have a significant balance in the full accrual statements and proprietary funds. So we test additions and disposals and look at depreciation for reasonableness. Capital assets is a challenging area because all the departments must work together to ensure that all assets are captured, properly reported, and also removed. Long-term debt, it's not a significantly complex area. However, it's an area with lots of financial statement disclosures. We send confirmations, test payments and proceeds, and test compliance with any debt covenants. And then accrued liabilities, PERS and OPEB. FERS, the Public Employee Retirement System, and then OPEB, the other post-employee benefits. We receive information from the state for both of those areas. You also have your own OPEB plan. And since actuaries are used in these areas, we test inputs for reasonableness and review the assumptions. And then for the bottom three areas, we're able to leverage our testing with the work performed by internal audit. So for grants, like I mentioned earlier, we completed a single audit since the county had over $750,000 in federal expenditures. We reviewed the compliance supplement to determine the areas to focus our testing on for each program. And this year we tested several major programs. I think there were 4 in total that we tested, and there were no findings identified. Since the county is an Oregon municipality, we are required to perform tests of the county's compliance with provisions of the Oregon revised statutes. Some of the areas we test for noncompliance are use of approved banks, debt, insurance and fidelity bond coverage, the appropriate laws, regulations pertaining to programs funded wholly or partially by other governmental agencies, use of revenue from taxes on motor vehicle use fuel funds, investment of public funds, awarding of public contracts, and the construction of public improvements and preparation, adoption, and execution of the annual budget. And then internal controls and the IT environment evaluation. We use this area as part of our planning procedures to assess risk and develop our audit plan. We obtain an understanding of the controls, perform walkthroughs of entire transactions, and also test controls. And this year we tested controls specifically related to property taxes, materials and services, and capital assets, in addition to our normal walkthroughs.
Before I go over our audit opinions that we issued, I just like to highlight here, as Leslie mentioned, we are able to utilize some of the work that's completed by your internal audit department, because you do invest in that department, and they actually put together a plan to test controls over financial reporting as well as controls over areas of compliance. We're able to utilize some of that work to reduce some of the testing that we have to do as part of our audit. So I just like to highlight that that's something that's unique to the county, that they invest in that, and it does impact how the external audit fees and being able to utilize such a department. A lot of other governments do have internal audit departments, but not all of them utilize them to perform testing over compliance as well as financial reporting. So I just like to highlight that's something that we get to do as part of working with the county. So after we complete all of that work, we issue 5 audit reports that get included in your annual comprehensive financial report. And as you can see on the screen here, I'll go over each one of these, but as you can see, out of all those 5 reports, we were able to issue an unmodified or clean opinion over your financial statements and had no reportable findings or instances of non-compliance in any of the other areas that require us to do compliance testing. So overall, very, very good results for a second year in a pandemic, and additional funding coming in, and the remote work environment being able to still be able to have such clean reports. Now, while I realize that this is something that the county has come to expect, it's not always still that easy to obtain such reports. If you look at other governments around the state, you'll find it's very common to have over expenditures or other sort of non-compliance in these areas, especially with the new grants that came in related to COVID-19 and just having to comply with some new requirements. So overall, just excellent results, and congratulations to the county in having such a clean audit this year. I'll touch on each one of these reports just really quickly. Leslie explained the work that we do in order to issue these reports, but I will go into a little bit more about what each one means. So for the financial statements, this is how you put together your financial statements in accordance with the generally accepted accounting principles. And based on all of our test work, we were able to issue an unmodified or clean opinion. That means we were able to get comfortable that the financial statements are free from material misstatements due to errors or fraud, and in accordance with those accounting principles that you follow. The Oregon minimum audit standards, we do issue a report over that as well. Included in this report would be if we identified any instance of noncompliance with Oregon revised statutes, but it also would report if we identified a significant deficiency or material weakness in controls over financial reporting, it would get included in that report. Significant deficiency or material weakness would also be reported in your government auditing standards report. So while we may have areas where we identify best practices, we did not have any internal control deficiencies that we believe rose to that level of being a significant deficiency or material weakness, which essentially means a material error could slip through the cracks. So over your uniform guidance report, we did audit 4 programs this year, all related to COVID-19 funding. And based on our audit, we were able to determine and issue unmodified opinions on each one of those major programs, as well as no instances of noncompliance. The last one is passenger facility charges, and this is related to your airport and requires specific audit procedures over compliance. And we found that the county was in compliance with those requirements. So overall, just very excellent results this year. So those were our reports, and that's essentially concludes how, our opinions and over the financial statements in areas of compliance. Our audit standards require that we provide you with some additional information about how the audit went. So these are items that don't get included in our audit reports, but we feel are important to just highlight or reference certain areas of your financial statements. So the first one is that plan, scope, and timing. If we were not able to complete the audit on time, we would include in our communications, which is a separate letter, why that occurred. For instance, last year, the compliance supplement related to your federal awards did not come out until December. So that delayed the single audit last year. And so that would be something that would be included in the report. This year, we were able to complete the audit on time. And so that was really great. I have quite a few clients that extended this year. So your significant accounting policies are in note 1 of your financial statements. And the reason why we think that it's important to point these out is because management has the opportunity to select different accounting policies and include those in your note disclosures. So while you do have to follow the generally accepted accounting principles, there is some flexibility in there. And so these are your policies that management have adopted in order to put your financial statements together. So the next item is management's judgments and accounting estimates. So it's important to point out that when putting your financial statements together, it does require management to make some estimates. And a good example of that is your capital assets. So you have a policy on how you depreciate those capital assets, and which is disclosed in your notes and is considered an estimate. Your more significant estimates really relate to your PERS liabilities and your OPEB liabilities, those other post-employment benefits. So those require actuaries to evaluate data, have significant assumptions, and put together an estimate for those liabilities. What's important is management is responsible for providing that data to the actuaries and making sure that it's accurate, as well as allocating it against the funds. So those are the areas that we spend time auditing to make sure that they're reported reasonably. Another area is that you are self-insured for certain risks. And so that also requires what is called a claims liability in your financial statements. And you do utilize a specialist in order to come up with that estimate. But similar to those PERS and OPEB liabilities, it does require management to provide good data to the actuary. And so we audit that as part of our process. The next item is audit adjustments that are made or passed. Is if as a result of our audit procedures, we identify an error. If it's material, management has to make that correction in order to receive that clean opinion. However, if it's not material, management does have the opportunity to pass on that adjustment. And we do communicate both of those instances to let you know what was either made or passed on. during the year. And the reason why management might pass on an adjustment is because your financial statements are 142 pages. And sometimes it takes a lot of effort to make an immaterial adjustment and make sure you're correcting each one of the pages correctly. In the current year, we had one adjustment, which is actually identified by management, and it related to a contract from 2014, so a very long time ago, where a party defaulted on some land that was part of a contract. And so when that party defaulted, it should have gone back to the county. And that was identified by management during the year. And so that adjustment was recorded and corrected within the financial statements. While it was not something that we identified as part of our audit, I did include it here because you do see that adjustment. And it was a result of some audit inquiries that we had around a new project that was going on in 2021. So I still wanted to include it here just to highlight to you to look at that. There's a note disclosure on it in the financial statements, but that has been fully corrected. If management were to consult with other auditors, if they disagreed with something that we were providing to them, we would alert you to that. And the important piece there is just really, if you do consult with other CPAs or other auditors, that we make sure that they have the same facts that we do if they're coming to a different conclusion. We're not aware of anything like that. We didn't have any disagreements with management or have any difficulties in performing the audit. And then we did have one recommendation for management as a best practice, really related to that prior period adjustment. Now, it was a very unique scenario, and it was something that happened a very long time ago. But as we talk at the end, when I go over some new accounting standards, you will be implementing a new software this year to track your leases. And that's an area that might help have some of these clauses in there that if someone were to default, that property would then go back to the county. So that is one way that you might be able to utilize that software in order to make sure that those types of things don't happen. Okay, and with that, the next item that we wanted to point out is that in addition to the financial statements that management puts together that are over 100 pages long, they also put together what is called the popular annual financial report. This is not something that's required, but management does put this together, and it's published on the Jackson County website. It's only 8 pages, and it's simple and easy to understand, some highlights out of that much larger financial statement. So just something to kind of highlight if anybody's looking to look at some highlights from any given year, that this is out there. It's 8 pages and really easy to read and has some good highlights in there. And I included a link to that on this slide. So that kind of concludes how the audit went. One thing that we don't always go over is how the county is doing. So with that, I have just a few snapshots of information included in your financial statements over the last 4 years, just some historical data looking at some analytics and how the county is actually doing. One of the things to note is this data is all included in your financial statements because management does put together that statistical information. There's 10 years worth of historical data included in each of your annual comprehensive financial reports. So if anybody does want to go back and look at certain accounts over many years, that is a good place to look. And it takes time and effort to put that information together. So it's nice that it is in a summarized format. And so we just took a snapshot of the last 4 years to see how the county is doing, knowing that these last 2 years really were unique and given the pandemic. And so how did that translate into the financial statement numbers in your report? So the first snapshot I have here is really over the countywide revenues. And I have a few different categories here. So you have your grants and contributions. So those would be like your federal awards and your state contracts, charges for services, property tax revenue, some miscellaneous revenue, and then revenue in total. And you can see here that revenue has actually been consistently increasing over the past 4 years in all of these categories. That main increase really is related to all of the additional funding related to COVID-19. And so that highest spike is really in the grants and contributions, and then that translates into your overall total revenue. So with that, you're seeing some good increases, even in your property tax revenue. You're seeing some slight increases there. Charges for services, you're seeing some slight increases there. So overall, what you do want to see is at least an increasing trend. And so it looks like the county is able to do that. And with those increasing revenues, you do see those increasing expenses. One thing to mention here is that you can see in that general government category over the last 4 years, there's a big spike last year. And that's kind of impacting your overall total expenses. So you can see in that total expenses line, you only increased expenses $3 million. However, it was a little bit more significant than that because of that general government line. In 2020, the county elected to contribute an additional fund to the PERS account, which was about $19 million. And so that's the result of that spike. The result of that contribution is to get the state match, and then that should result in decreasing PERS rates over time. So 2020 kind of posed a unique year. So while it doesn't look like your expenses increased in line with your revenue, it really, if you take that out, you would see that there would be much more significant increase in expenses similar to that additional revenue. And you can see that the areas that really had those increased expenses this year were really in public safety and your health and human services departments, which makes sense given the pandemic that's going on. The next one is your net position. So this is something that you can take as a snapshot to really tell if the financial position of the county is increasing or deteriorating. And so this takes all of your assets and removes all of your liabilities and says, what's left over? And so you have 4 bars here on the screen. That first dark bar is your total line. The green bar is your net investment in capital assets. That little gray line is your restricted. So these are your restricted assets you have to use for a very specific purpose set by external parties. And then that 4th line is your unrestricted balance. And so you can see if you're looking at this graph that in total and your unrestricted balances are all increasing over the last 5 years. And so that would tell me that the county is improving their financial position. Another thing to highlight here that somebody might not be aware of is that you have positive balances in all accounts, including that unrestricted balance. A lot of governments, when they had to implement the accounting standard that required them to put their pension liability on their books, and then the next couple of years put their OPEB liability on their books, it really required that unrestricted category to become negative. And so you can see over the past 5 years, not only does the county have positive balances in all categories, but those balances are increasing or improving over time. The next slide is a snapshot of your general fund. So this is that fund that you have the most impact in being able to utilize the resources. So they have the least amount of restricted funds within your general fund. And so this is a snapshot of the revenue and expenses, and then that ending fund balance at the end of the year for the past 5 years. And you can see that consistent with the revenue for the county, it has been continued to increase over the past 5 years. And that big jump in 2021 really is related to some of that additional funding related to COVID. And while this graph shows that your expenses decreased in 2021, that really is related to that same item that we talked about previously, which is that additional contribution to the PERS account of $19 million. So had that not occurred, you would have seen more of a traditional incline in your expenses that meet your revenues there. And then as you can see, I'll talk a little bit more about your fund balance, but the fund balance of the general fund has been able to increase over the past 5 years as well. So this is just looking at your cash balance. So this essentially compares what is in fund balance. So your assets minus your liabilities equals your fund balance. So this is just your cash balance. And you will see that they're increased significantly this last year. That is really due to a couple things. One is COVID-19 funding in different areas. Specifically the ARPA funding that came in, the American Rescue Plan funds that came in May of 2021, that really increased cash balances for a lot of governments, and then is recorded in unearned revenue. So you're not actually seeing that hit your revenue yet. So that's one difference there. But overall, general fund has very a very strong cash balance over the past 5 years, and seeing that increase, even with that $19 million payment in 2020. So this is a look at the county debt. So over the past 5 years, the first three, you see those just traditional payments, no additional debt in order to fund any projects. The county's been able to fund projects utilizing resources that the county has. In 2020, a bond was issued related to the communication equipment. And so that is being funding some additional upgraded communication equipment. And so you can see in 2021, it was reduced by current year payments. So no additional new debt in 2021. So general fund as a percent of expenditures, one of the statistics that we look at in looking at the health of a government is there's really a recommendation out there that you at least have 2.5 months of reserves, which is about 17%. And you can see that the county is able to actually have 100% of expenditures. Now, it's still something to monitor, not just because you have a really good general fund balance to support your expenditures, but it is still something to monitor and make sure that your general fund has the ability to support your expenditures. Clearly in a very good, strong position for 2021, and is consistent with the past 4 or 5 years as well. So, and with that, we talked a little bit about this entire time about the health of the county, and that you're seeing those good increasing lines over revenues and fund balance and net position. And what's important to point out is that the county's permanent direct tax rate has not increased, and is quite a bit lower when you're looking at some of your counterparts in the north. So you're able to still fund your projects, increase your fund balance, and have reserves so that you can continue to fund projects, but you're doing that with a lot lower rate, and have not asked for those additional funds from your citizens of Jackson County through property tax rate increases or anything along those lines. So it's just something that we point out, looking at those different rates around the state and how it's impacting the different governments. So that was kind of a snapshot and how the county looked financially over the past 4 or 5 years. I'm not going to go through an accounting lesson here with you, but we just want to talk a little bit about the standards that were implemented. A lot of these ones on the screen did not have an impact. The first 4 that you're looking at there did not have a significant impact to the county statements. However, it's important to know that those are new standards that the county adopted. And so if you have something in the future that's applicable to them, you will have to follow that new accounting guidance. That one on the bottom, GASB 98, probably had the most visible change. So that changed the name of your report from Comprehensive Annual Financial Report to Annual Comprehensive Financial Report. Seems like a small change there, but it was something that was very important to GFOA to have changed. So that's probably the most significant that you're going to see in the 2021 financial statements. Now, looking to the future, you have a few accounting standards to implement. The most significant, which is applicable this next year and will have impact to your financial statements, is that lease accounting. It is going to change the structure of your statement of net position, and it is going to include new accounts on there. So essentially putting all of your leases on the balance sheet. As part of our discussions with management, we are aware that they are already working on implementing the standards so that we're prepared when the year end closes this year and be able to implement that. I believe they were able to purchase a software to help them put together those journal entries as well as the note disclosures to implement that new accounting standard. Just a few others that are on the horizon that I don't suspect are going to have a significant impact to the county, but just something to be aware of are a few other standards over the next couple years. Something that's not on the slide that I did want to mention is that these are all accounting standards that the management will have to deal with and implement. Next fiscal year, we actually have a new auditing standard that we have to comply with. And this will actually change the look of our audit reports. So right now, the opinion's kind of that fourth or fifth paragraph in your financial statements. As part of our audit standards, they wanted to be a little bit more transparent. So that opinion paragraph that we issue will be the very first paragraph of your audit report. So just expect some changes in how our audit reports look next year, but that's probably the most significant change. And with that, I'd just like to say thank you to everyone on your team. We enjoy working with Eric and internal audit, Shannon in finance, and of course, Michelle through the accounting department, putting the financial statements together. So with that, I will open it up for questions. And again, I apologize for sounding like this today.
Well, thank you, Amanda. We're glad you're better.
Thank you. Me too.
And let me just open it up for the commissioners. If you have any comments or questions.
Sure. I will start off. Amanda, you sounded fine. I can hear every word. Thank you. I just appreciate everybody's effort in this and the continual flexibility to adapt to all the new standards each and every year. Oh my goodness. I appreciate such a great report from the county's really fiscal responsibility is kind of what we aim for, and it's nice to get it all captured in a report, but also accolades to our administration in the deliverables, and Shannon Bell and her staff and Eric Spivak, all their staff, they just do a great job, and just thank you everybody for the hard work that goes into this.
This is, I think, our 8th one of these now that Colleen and I have heard. And again, it always seems routine. This clean, unmodified opinion, no reportable findings, and full compliance. So, again, it seems like it's a routine, simple task, and we know it's not. We know that this is the result of daily diligence, just the dedication of all of our, just right down the line, department heads, finance, administration, auditing, and really probably up and down the line. Every employee in Jackson County contributes to this in some way. And when you look at, not just our clean and unmodified opinions, how well we report, but our financial position and how we get there, and how strong that really is, especially, coming through this pandemic. I think people, really need to look at that and understand we are at the county delivering these services extremely efficiently, and we are in great financial position moving forward. And I think that should give everybody in the county confidence, knowing that going forward we are in excellent financial shape. Again, I want to thank you guys. You do a lot of work, and you present a very thorough report. And again, thank you. I prefer this. This is the second time, I think, maybe it's the third time that we haven't been able to do this live. I prefer to be able to look out into the auditorium at all the folks that are there from these various departments and thank them personally. But I want to do that right now anyway, because it really is a lot of work. It really is extremely impressive, and it really, really does create a substantial benefit for everybody that lives in Jackson County. So I want to make sure that I thank all of them and you. So thank you.
Okay, thank you. And before I close and with my comments, Danny, do you have anything that you'd like to add? No? Okay. Well, I'd just like to say, I'm going to just say whatever, all that Colleen and Rick said. Boy, Rick, I couldn't have said it any better. I was sitting here thinking about what I was going to say. I had it written down and everything. I was going, okay, Rick said that, Rick said, but I really do want to say thank you to this team from Moss Adams, but also to our management and leadership team for the wonderful job that they do. And I include all the department heads and everything else, and Danny and all that have done such a great job. And Rick's absolutely right. As you sit here as a county commissioner, I hope the citizens of Jackson County realize what a great financial position we're in. This is really tremendous. So thank you very much. And with that, I will ask again if there's any more comments from the Moss Adams team or from either of the commissioners. No? Okay, Amanda and Leslie, thank you very much. I really appreciate all your.
Thank you.